Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a short trade off the consolidation highs here on the S&P. Now the first target is just going to be back down to the lows. So we're short at the highs, 2107.50. Lows is going to be down at 2105.50. Now we don't want to put our target right on the lows, so let's go to 2105.75. And we're going to take off half of the position there, 3 contracts. Let's get the stop in place as well, just above the highs there. We'll go up 6. Now we're short 6 contracts just because it's the ES. The stop really isn't that big in terms of size like we're normally used to. So if we're short at 2107.5, our stop is a 1.5. That's 6 ticks. So it's a very small stop. We can afford to get in with a couple more contracts. Now along with that, we're taking 3 off at the consolidation lows, just back down here at 2105.50. Primarily because we haven't seen it fail yet. Now, with this fake break that we're seeing at the highs right now that we're entering short off of, I would anticipate the lows to break down. We're faking out the highs. We should fake down the lows. So that means that the next target's going to be at the expansion lows, 2103.50. Again, we don't want to go right on that level, 2103.75. We'll take 3 more contracts off there. Now, if you're a little more conservative, you can take 4 off there and 2 off down at the low. Look for a little bit more off at that first target just because it is consolidated. And actually, I kind of like that because you're not anticipating a huge breakdown. You might just get what we had here. You don't quite make it up to that expansion level before it starts turning right back around again. So right now we're short 2107.50, short 6 contracts. Looking for the first target coming off at 2105.75. If we can get that filled down at the lows, it's going to be a 1.75. So again, the ES ticks and quarters, that's 0.25 per tick. So when we're looking at this is actually 7 ticks. Now, 7 ticks at $12.50 a piece is $87.50 times 4 contracts. It's $350 at that first target if we can get that one filled. And then if we're looking at the next target below from our entry point, looking at the expansion target down here, giving us 3 3/4 points. So another nice little move down. Now, in terms of ticks, that's 15 ticks. So the first one giving us 15, 2 off there, gives us 30, and then the other one off, 4 off at a 1.75. So overall, looking pretty solid in terms of the overall setup. Just need to give it a little bit of time. The S&P has been very slow, as you can see. I don't think I need to make that any more obvious for you. We're just selling the consolidation highs. That's really all there is to it. So we'll be back in a little bit. See if we can catch a little fall down to the downside here, back to the lows, and maybe even a push back through the bottom and out to the expansion level at 2103.75. So we'll be back in a little bit. All right, we're coming into our, okay, we got that target filled. We're back to consolidation lows. We've got 2 contracts left on the trade. Let's move our stop to break even here. Now I'm going to rest it on break even for right now, simply just because we're seeing this kind of being a little bit bursty here, and I really don't want, I want to see us break through it first. And actually, we're getting a lot of volume coming in. Okay, so I'm going to lock my stop in a little bit farther now. We're coming really, really strong to the downside here. There's a lot of volume. And actually, now we've come 1 tick away from our target, so I'm going to lock in even more. Back up at 2105.75. Just back ahead of that consolidation. The reason I'm putting it 2105.75 is just because it's going to have to come back through 2105 half to stop us out. And there we go. We just got our target filled. Let me cancel my stop. Quick little move down. That was a huge amount of volume coming in. And primarily, I mean, you can kind of see what happened, right? We came up to the highs. The breakout traders, thinking that this is finally going to break out to the upside, they just all got stopped out. And there's a big block of stops right below those lows, right below that low back here. So they all got stopped out in one big move down. Now, honestly, this is a consolidation day. It's probably going to rotate right back up again. And again, the exact same thing that we just saw at the highs. The sellers are going to come in thinking it broke out, and they might have got a little bit out of it, but their stops are going to be above the high. So it wouldn't be a surprise to see us float right back up again and maybe even test 2109.50. We'll see if we can get up there. And you can see they're already rejecting off of it. It could have got even a better fill down there. But anyway, so overall, we got 58 ticks on the trade. Beautiful trade to the downside, and again, that's $12.50 a tick. So that actually gives us $725 on the downside. So even though the risk was very small, it's only 6 ticks, you can still bank a really nice move out of the S&P, and that's kind of the idea behind the S&P anyway. Trade larger size, smaller targets, wonderful little market. So that's going to be the trade for today. 58 ticks on the trade. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out or try out at schooloftrade.com, and as always, we'll catch you next time.